Today we're going to talk about payroll tax audits. The worst two things that can happen is they can lead to personal liability of the unpaid payroll taxes, and they can lead to criminal prosecution. Listen, payroll tax audits don't stay about the numbers all the time. They can become extremely personal, because when payroll taxes are not properly handled, the IRS doesn't just pursue the business, they pursue the responsible individual, owners, officers, controllers, employees, anybody with authority over money. And in the wrong fact pattern, these cases can rapidly escalate into criminal tax exposure. Hi, I'm David W. Klossing. I'm a dual licensed tax attorney and CPA, and I'm the owner of the tax law offices of David W. Klossing. Today, 24 offices in 11 states. Today I'm going to break down how payroll tax audits work, why they carry very unique risk, and how they can go quickly from civil enforcement to criminal employment tax exposure. Why are payroll audits so damn different? Well, payroll tax audits are fundamentally different from income tax audits. Why? Because they involve trust fund taxes. These are taxes that are withheld from employees' wages, like federal income tax withholding, Social Security, and Medicare tax. The government treats these funds as money that the employer and their employees hold in trust on behalf of the company's employees. These are not business funds, period. And when they're not paid over, the civil and criminal tax risks escalate immediately. The IRS can and does assess the trust fund recovery penalty against individuals that it deems responsible parties, not just against the business at issue. That includes anyone who had any authority over payments, payroll decisions, or had financial control. And here's the key underlying issue: willfulness. Willfulness does not require an evil intent to defraud. It could be as simple as this: knowing employment taxes were due and choosing to pay another creditor instead. Seems innocent enough, right? Payroll audits often begin with issues that appear routine: worker classification, cash wages, fringe benefits, or mismatches between filings and payroll records. In California, the Employment Development Department focuses heavily on these issues. But when discrepancies appear, the audit scope expands. So what are some of the high-risk fact patterns auditors look for? Certain patterns trigger deeper scrutiny right off the bat. Cash payments made to workers that didn't wind up on a 1099 or W-2, unreported wages, incomplete payroll records, payroll systems that don't match bank activity, or reconstructed documentation. When auditors move from focusing on numbers and start to focus on responsible party decision-making, they may begin building a case around criminal employment tax intent. So, how do civil cases in payroll turn criminal? Payroll tax issues often begin as civil matters, but they escalate when the IRS sees things like willful non-payment of employment taxes, concealment, false records, or a diversion of funds. At that point, the government may consider criminal employment tax statutes, including felony exposure for failure to pay over employment taxes. Why do these cases wind up becoming personal? Unlike other audits, payroll cases focus on responsible parties as individuals. The IRS evaluates things like who controlled funds, who made decisions, who knew employment taxes were going unpaid. This means that your role within the business matters as much as the underlying numbers. So why does the defense strategy matter so much here? Well, first of all, payroll audits are not just accounting problems. They are civil and criminal tax risk issues. Your representative needs to control what is said, what information is produced, and how records are interpreted, because once statements are made on the record, they become part of an evidentiary record. If you're facing a payroll tax audit, early strategy is critical. At the tax law offices of David W. Klossing, our dual licensed tax attorneys and CPAs combine legal defense with payroll analysis to protect your position. Call 1-800-681-1295 or visit klossing-associates.com to schedule a confidential, reduced-rate initial consultation today. You won't regret it. Dave Klossing, tax attorney, CPA.